World Cup, and it was sort of poetic, right? After India won, the market continued to go up. So really, it was a day that belonged to the week that belonged to the Bulls.
Yeah, absolutely. I'll share some interesting data towards the end on the World Cup wins and the market returns. So let there be a bit of a surprise towards the end. But yeah, I mean, it was a good thing that finally we won the World Cup 2020. And what a crowd yesterday, right? Yeah. I mean, the amount of people who came down to just cheer the team, it was an amazing, amazing thing to watch. So much of people coming, so much of people cheering around, and the whole team was so much excited to party and all. It was like one of those superb events to watch.
Yeah, that's right. Nimesh, I'm going to be waiting by for those data points. But the markets behaved like how the Indian bowling team was. We did perform. The spinners didn't perform. The fast bowlers performed.
Yeah.
Hardik wasn't performing. He came and bowled a splendid last over. Bumrah was very, very good.
Somebody or the
other was chipping in. It's like the bowling attack, and ultimately we came out trumps. So cheers to that.
And I think it's like a T20, right? I mean, every day is like a... Actually, markets are like, I mean, especially when you report on markets, every day is like a one day. Yeah. But I think it's the pace has quickened, the gains have quickened, everything is happening so fast. And let me just actually put some data points out,
sure.
Sonia, because today it marks exactly 1 month since that election verdict, election results day, right? 4th of June was when we got the election results, and it's 1 month. And it seems like a distant memory. Because not just, I mean, the verdict itself, but also where we were in terms of levels. So the changes will come up on your screens. Nifty is up 11%, in the last 1 month. The Bank Nifty is up 12% in the last 1 month. The Midcap index is up 16% in the last 1 month. The small cap index is up 20%, and the micro cap index is up 24%. So as you go down and down and down, gains keep getting bigger and bigger. I mean, from large caps, you go down to the sort of mid caps, to small caps, to micro, gains are larger. And that kind of tells you something about the kind of market that we're in. Sectorally as well, same 1 month return. This is all, by the way, not from the lows of that day when the market had that, Nifty fell 1,700 points, but from the close. CPSE index 18% in the last 1 month. That's public sector stocks. IT index 17%. Real estate went up 14%. You had oil and gas up 14%, and you had private banks which went up 13%. So this is, quite amazing to really sort of look at and behold. And, what to watch out for, we know. There's been earnings, and IT will be first off the block. Stocks have rallied. Budget, we're still waiting for a date. Will it be the 22nd? Will it be, in that week? Sometime that week, we'll get the date. Positioning is clearly one-sided. And I think we've been highlighting the fact that one of the data points in that sense is the FI positioning in index futures, which is now close to about 4 lakh crores or so. All of this also means that the hunt for new ideas, Nimesh, and we've spoken about this, is manic. People are acting on, just names, and, the first time you hear something and next you look, the stock is up 10%, 15%. That's the kind of markets. What I just quickly did, Sonia, is looked at the new initiations in this last 1 month or so from brokers. It's actually, and it's always like that. It's not the foreign guys, but it's the local guys who are more clued in. So Goldman, I think, is the only large foreign broker who had those initiations. We discussed some of this, TBO Tech and Mapma India and Uno Minda. But look at Spark, which is South-based broker now, of course, part of Avendus. They initiated on Tips Industries. They initiated on Prudent Corporate Advisory. You look at IIFL Equities, NetWeb Technologies, J&K India, and I'm only highlighting things which are not well covered otherwise. Kotak initiated, actually, Kotak JB Chemicals, I think it's well covered, Coforge, Amara Raja, etc. BNK initiated on Archean Chemicals, Vinati Organics, Axis, TBO Tech, Novama, BKG Foods, Medi Assist, and somebody like Incred initiated on MTAR Tech. It's not an exhaustive list. I mean, there are many others as well, but I think it just shows you that people are sort of hunting for ideas. They want newer names because, what is already out there, what is already well known is kind of juiced up quite a bit.
But it's interesting you say that, because then that brings us to the next question. Is this a market that has reached a euphoric level, right? Is there any kind of froth that's building up? And let's actually pose this question to Harish Bihani. He's joining in on the show. Harish, thanks so much for joining us. It's been relentless, the rally, right? I think post-COVID, we haven't seen any major correction in this market, which also is kind of brings a little bit of caution to the table as well. Have we reached euphoric levels? Is this a time to start getting a bit cautious, or do you think the run is something that can continue?
I think a couple of points here. First is that the market is euphoric or not has to be thought through in terms of the business cycle, earning cycle, capital cycle, and the behavioral cycle. So when you look at the business cycle, earning cycle, and the capital cycle, it's in favor at this point in time in India. And when you look at business cycle, you look at profit to GDP, we're somewhere in the middle. We peaked somewhere in 2009, then it took 10 years for us to form a bottom, and then we started inching up from there on. So we are moving up as we speak. We are somewhere in the middle of that profit to GDP cycle. You look at the net debt to equity for corporate India, it's at a 15-year low. You look at banking balance sheet, it's extremely good at this point in time. So many factors point to a robust business cycle. We'll have to see how it shapes up over the next couple of years, but it seems very benign at this point in time. When you look at the earnings cycle, it's fairly steady. Earnings are coming through for large, mid, small cap companies supported by the business cycle. In terms of capital cycle also, it's not that every sector, a lot of companies are chasing or there's too much competition in all these sectors. So which is also helping the earnings cycle. Lastly, the only worry that we have when we look at the markets is the behavioral cycle. You look at how market participants are behaving. That is something, and you pointed out in the initial part of this particular program, how markets have moved up over the past 1 month, 2 months, 3 months. That is something, and when you look at the IPO market, when you look at promoter selling, when you look at the private equity selling, that's something that should make one cautious. And that said, on balance, things are moving in the right direction. We'll have to move ahead, but with caution.
Harish, as even Prashant pointed out, there was a big rally in the mid-cap and the small-cap indices in the last 1 minute itself. And actually, Kotak has now resumed the subscription in the small-cap fund. What is your take overall on the small and mid-cap, and how far you see the opportunities in that particular space?
At the time of closing, to thought through in terms of business cycle, in terms of evaluation, it was slightly on the higher side, and we thought through on the event that was about to play out. So we thought through that, why don't we take a fresh call post the event playing out? Now the event that we had all waited for has played out. It seems that we are well poised in terms of the business cycle, and that is why we reopened our fund. In aggregate, when you look at the valuations of mid-cap or a small-cap bucket, it's on the higher side. It's 20-25% higher versus previous highs. That said, we have to think through in terms of how the cycle is and how the cycle is going to behave over the next couple of years. That's one. Secondly, as I spoke about in our earlier meetings too, that when you think about India's journey from a $3.5 to $10 trillion, there'll be many small companies which will become very size over the next 3, 5, and 10 years. So the entire effort today is to identify those ideas, those themes that will become very big in size as India becomes big in size. And there are opportunities all across. Maybe we'll have to live through slightly higher valuation for that compounding, which will come over a slightly more elevated period, which is what we are telling all the investors too. That look, when you come in the market today, you will have to have a much longer time horizon versus earlier. You can't presume that the returns that you made in the past 1, 2, 3 years, you'll get similar returns in the next 6 to 12 months. Maybe you'll see a time correction, but that's a healthy correction for the market. That should happen, whether a time correction or absolute correction. It might happen at any point in time. It's very difficult to forecast. That's a healthy correction as a part of the overall cycle that we are playing in at this point in time.
Okay, all right, Harish, we'll come back to you in just a bit, but we want to talk about the IT services space, because the street is turning optimistic on IT companies, and the question is, valuations are re-rating, or business is also going to look up. Nigel, you've put together some data.
Well, that's right. Contributions coming in from REMA, obviously, that's been covering a lot on IT in the last week or so. So let me go across to the wall and, in fact, cover this space. The street is bidding up the IT space, and there is optimism building in, but are they making something out of nothing at all? Well, that's the question out there. But if you look at the stock price, you look at what the index has done in the last 1 month or so, well, clearly the IT space, has outperformed. And that's the reason why, in fact, the street believes that maybe Q2 is going to be quite good. From Q1 onwards, we'll see a recovery. So let's run you through a few data points. First up, in the last quarter, at the end of last quarter, various brokerages went ahead and they skimmed down their estimates. And UBS, the chart should come up for you on the screen. FY25, FY26, well, they went ahead and they cut some kind of, guidance in terms of what they were estimating. But the question is, was that the end of the downgrade cycle, and will things look up from here on? The street is basically focusing on 3 parameters, and that's why there is optimism that's building in. And these are inputs coming in from Kotak. they're seeing that seasonal strength coming back in. Large deals ramp up, that's possible. And also, there could be a reduction in intensity of the cuts that we saw, particularly in discretionary programs, which in fact will bode well for it. So that's important as well. Out with notes this week, and we had the main for CLSA. On the target price, they said operationally things will improve. They also hinted that there could possibly be a buyback as well. So that was on CLSA. Nomura, they turned positive on the sector on the whole. While Jefferies as well as UBS, they're being very, very selective. And one of the reasons for Jefferies to be selective is they are highlighting that valuations, well, they're at a premium in comparison to its 5-year average, as well as if you compare it to what the Nifty is trading at. So Jefferies puts out that the Nifty IT index is trading at a 28% premium in comparison to what it normally trades at. Now, if you just look at the chart as well, you'll see that on a valuation basis, in comparison to its 5-year average, it's trading at a premium. But we spoke to a couple of analysts on the street, and they said that maybe this premium will not appear as much because there could be surprises on the margin front. So put all this together, the street is bracing for brighter prospects, but will it come about? Let me put a question to Harish. Harish, what's your view? The street has clearly turned very, very optimistic. The stock prices are telling us that. Do you concur with this optimism, or do you believe there still could be some pain in the near term?
I guess on average, things are looking slightly better for specific companies in this particular sector. And this is a very unique sector wherein people take call on how near term is going to shape up. There are companies which will report better numbers in this particular quarter, and you've seen some sharp uptick in share price for those companies, and vice versa, companies which aren't reporting or which aren't likely to report better numbers, you've seen their share price stagnate. So that's more near term. But when you think about slightly medium term, there's still this dichotomy of when the rate cuts is going to happen. Fed is going to cut their rates. Secondly, we're still unsure how US economy is going to behave given the slowdown that we are seeing at this point in time. So there are bulls and bears argument at this point in time. On balance, there are companies where growth is going to be on the higher side, which is where we are focusing on, where regardless of how macro shapes up, the overall growth will be in double digits, and that's where we are investing at this point in time.
Right. So Harish, going by what you're saying, are you tilting more towards the mid-cap names rather than the large-cap names because they could outgrow what the larger caps are doing?
Yes, we are tilting more towards the mid-cap names. We are looking at the mid-cap bucket. We are looking at niche companies, whether it's in the ER&D sector, whether it's in the pure IT services. Some of those are growing ahead of the larger cap companies, and that is where we are focusing on. In some cases, valuation have moved up very, very sharply in the past, but on average, there are still opportunities around over there.
Okay, well, let's do one thing. Let's take a quick commercial break. We continue to decode the market action and also tell you the kind of returns that markets have seen every time India has won a World Cup. That and more on the other side. Stay tuned. Welcome back to Editor's Roundtable. It's been a phenomenal run for the market in the last 1 week. In the last couple of weeks, actually, continue to sit at record highs. A lot of milestones have been scaled out, and we have Harish Bihani here with us to tell us how to approach the markets here on. Harish, one sector that has been in focus for the last many weeks is Telecom. After that much-awaited tariff hike has come through from Reliance, then from Jio, then we went on to Bharti Airtel as well. And these are stocks that have given great returns to shareholders. Do you think that there's more to go in the telecom space?
Absolutely. This is a part of the repair cycle in this particular sector. The capital cycle is in favor. There are only 3 companies in the sector effectively. Second is that all companies have decided to focus on profitability, balance sheet and cash flows. And this is the beginning. So there's more to go. As you would all know that Reliance Jio should list. We don't know the timeline, but it should happen. And if that happens, then the repair of the sector, the balance sheet repair should continue. And with that, the earnings will continue to move up. Will it be similar tariff hike versus what we have seen about a week back? It seems highly likely to us. So telecom seems a fairly decent sector to invest in at this point in time.
Harish, coming back to that point on the small and mid cap, you spoke about big opportunities for some companies which can become very large. I know you can't talk stocks, but if you can just give us some idea on the sectors which you are bullish on, which are the big total addressable market where you think there could be large opportunities. Somebody was pointing to QSR as a big space. If you can just identify 2-3 sectors for us which can be really big over the next few years.
Absolutely. So first is very simple healthcare. Whether you look at the hospital companies or diagnostic companies or domestic facing pharma companies, which are small in size, as India graduates from a $3.5 to a $10 trillion, we'll need many hospitals, many diagnostic companies. And the bandwidth of the existing diagnostic and hospital companies need to increase significantly. And the profit pool, if you look at the existing profit pool in these sectors, it's extremely good. And there's no reason to believe that the profit pool will come down in these segments. You spoke about QSR. In a country like India, which will become very big in size, there'll be at least 2 players which will become very big in size. You look at the entire auto ancillary space, especially the auto ancillary names in the small cap space. We have been very bullish over there across our funds. And they are behaving very similar to engineering companies now. They have diversified their product basket. They're getting into engineering areas. And we have seen significant re-rating in these names. And that should continue as we speak. You're looking at the entire capital goods names, although the valuations are elevated at this point in time, but there are niche pockets in the manufacturing capital good names that are looking good to us. You look at the entire infra basket. You have specific names in the infra basket that aren't very expensive, very constructive over there. So many opportunities keep emerging. We'll have to work harder, keep looking out for such opportunities in a market like these.
For somebody who's watching, Harish, and wants to put money, does a small cap fund make sense, or like a multi cap or a multi asset fund make more sense? What's the recommendation?
No, it's very clear, Prashant, that we'll have to think through on the time horizon that we are investing our hard-earned money in. The longer the time horizon, you could invest in any particular pocket where volatility will be very high in the near term, but it evens out as we lengthen our time horizon. So if you take a pure equity bucket of small cap, mid cap, flexi cap, multi cap, you need to have a much longer time horizon. For something like a balanced fund, which can take calls on market, can increase the equity allocation up and down. Those are areas where you should invest in lump sum in a markets like today, so much more versus what you would do in a pure equity fund, especially in the mid and small cap bucket, where valuations have moved up higher. So that is what we have been suggesting to all our investors.
All right, Harish, request you to hold that thought. Well, Nimesh, at the start of the show, you teased us. You said there is some relation between the markets as well as cricket. We want to know what's the data you're throwing up.
Well, it's a very interesting data. Even I mean, it was a kind of an eye-opener for me as well. So the first, big win was in 2007, right? The inaugural T20 World Cup, which we won. The Modi, the whole, team was such a first-time kind of thing, right? But if you look at the market returns after the win, I just looked at 3 months, 6 months, and 1 year period. In the first 3 months after the 2007 World Cup win, the markets were up 18 to 21%. I'm talking about Nifty and Sensex. 18 to 20% rally in the first 3 months. However, in the next 6 months, over a 6 months period from the election when the markets were down between 7 to 9%. And over a 12-month period, the markets were down between 15 to 18%. So that was the kind of correction we saw in 27 after the World Cup win for India. Now coming to 2011, which was a 50 World Cup in Mumbai, it was something I was witness to. But look at the data after the win. Over a 3-month period, the markets were down 3.5%. Over a 6-month period, the markets were down 15%. And over a 12-month period, the markets were down 10%. So on an average, over a 6-month and a 12-month period, over the past 2 instances, we've seen between 10 to 20% kind of corrections in the market. Will history repeat? Only time will tell. But as even Prashant pointed out, we started the last 1 month, we've seen a rally between 10 to 24% across all the indices. So we've seen a long, pretty hard rally in the markets. Historically, the last two instances have suggested that over a 6-month and a 12-month period, markets, the periods are quite tough and we give negative returns. So need to see how, post the 24 win, how the next 6 to 12 months pan out for India. But history suggests that we've seen a very tough period for markets in the 6 to 12 month period after we win the World Cup, the 2020 or 50 World Cup.
On the cricket aspect, it also suggests that we'll win the 50 over World Cup in the next 4 years. So look at it positively.
Well, let's just hope this time history doesn't repeat itself, right?
So, yeah.
But tough period can also mean consolidation. Well,
Yes.
in any case, Harish, just one final word from your end before we, end the show. This is an important month because we have the budget coming up, right? And this time around, I think the government has some flexibility because of the higher RBI dividend, because of the higher tax collections, etc. Do you think there are some stimulus measures coming, some perhaps populist measures as well? And what would all of this mean from a market standpoint?
I think that's a popular consensus, Sonia, that there will be some kind of a stimulus, and which is where you've seen rural-facing companies doing well in the past 15 days or so. That said, when you think about on average, what could be the kind of stimulus and will it have a significant impact on the overall market, it seems unlikely to us. There'll be specific companies, specific pockets that should do well. There will be on average, we think that the pace of the reforms that the government took in the past 10 years, that pace of reforms will continue. There'll be more allocation towards capex-heavy sectors. So that will continue. There might be higher allocation to the consumption basket or to certain areas where money is required at this point in time. It doesn't change in aggregate. It doesn't change the overall market environment significantly.
Okay, all right. Well, on that note, we are going to call it a wrap on this edition of Editor's Roundtable. You guys have a great weekend. Of course, we're still reeling under the World Cup win and, that whole bonhomie continues. But stay tuned as news continues right here on CNBC-TV18.